Round 5C. Let's take a look and try to make it relatively quick, although I'm going to go over a couple of things that I think will be vital to your assignment for this week, which has a couple little quirky questions in it. That by quirky, I mean things we haven't really done before, but things that you ought to know about financial statements and whatnot. So again, we take a look, and our computer team is dominating sales. I think last round it was closer, but they took a jump. Baldwin coming in second, a little ways ahead of Andrews, and Digby, Erie, and Ferris kind of faltering a little bit in terms of their sales. And maybe we'll be able to see why as we go along. Worse, they have really, really, really low contribution margins, and in Ferris's case, really high SG&A to sales. What do we guess at this point in time? That they're not meeting the customer buying criteria, spending a lot of money relative to their sales on trying to generate some sales, but their products probably just aren't appealing. In Erie's case, I think it was that they had a lot of leftover inventory as well that they're still trying to get rid of. And probably, remember, they had items that were high priced. They probably had to reduce those prices to try to get rid of those. So the stock market summary, and one of the questions that will be on the assignment, I want to briefly go over this a little bit, is really dealing with the difference between market cap and book value. Okay, and we haven't talked a lot about that, but market cap, and in the real world, you'll have those types of differences as well, where you'll have a market cap versus a book value. And market cap is simply the number of shares outstanding times the price of those shares in the market. Okay, so we take a look at Andrews, 2 million shares outstanding, a price of 54. Whatever, we'll call it 54.59. This is obviously rounded. But if you took the 2 million times the 54.59, you'd come up with 109,180,000, actually, somewhere in that neighborhood. Okay, so it's that simple to calculate the market cap. This is what people who are buying and selling the stock believe it's worth, and you multiply that by the number of shares outstanding, you get the market cap. The book value, on the other hand, is the value, the accounting value, something that you learn in Rod's classes when you talk about the accounting value. So you purchase equipment, it's booked, okay, put into your accounting, but then it depreciates, okay, and so the book value, $40.86, and this is on a per share basis, right? So the book value of this company is only about $81.5 million, okay, so it's substantially less than what the market cap is, and you'll see that in the real world as well. We could take a look at Apple or Microsoft or any of those companies, and in fact, a lot of those companies have really small book values because it doesn't take a lot of equipment and whatnot to generate the income that they generate. Okay, and so they have relatively a really small book value compared to their market cap. Apple's market cap is approaching $1 trillion. I don't know, 700-800 billion, something like that. And I'll bet their book value is, I know it's a little higher than what I would normally say, but that's because they got so much cash on hand. They have about $300 billion of cash on hand. If you take above the cash, it's probably only $100 billion maybe in equipment and those types of things that Apple actually has. Plant, equipment. Of course, they just built that $1 billion new facility down in the middle of California. So that's going to be important. I'm going to ask you to do some calculations about this, okay? And what those calculations will involve is that if we sell stock, okay, so if Andrews, and I think that's kind of what the question is, if they sold 100,000 shares of stock and they'd sell it at this price, right, the market price, but what would that do to book value? Well, you'd sell 100,000 shares, it would raise X amount of dollars, that dollars would go to equity, okay, and equity then is how we calculate book value. So you would take the equity, the book equity, and divide that by the number of shares, okay, to get a book value. And so it's going to change the book value, right, because we're selling stock at an amount that's greater than the book value, so it should inch up the book value a little bit. We're only selling 100,000 shares maybe, so it's only maybe a 5% increase, something to that effect. Okay, it's a 5% increase in the number of shares outstanding. The impact that has on the book value is going to be different than that 5%, so don't use the 5% to do your calculations. Okay, I'm also going to ask you another question about the bond market. Okay, the bond market summary, and what do we got going on there? Well, I asked you about the ratings over here, and those are kind of important, but the question that I'm going to ask you this time is about this column. Okay, this has to do with whether something is selling at a premium or a discount. Okay, and it's based on 100. You could almost think of 100%, right, or 1. Okay, so if something were selling for 1, it would be selling at the face value. Okay, because this is over 1, that means that it's selling at a premium. Okay, that means the rates have actually gone down in the marketplace. Maybe we can look down here, and next year's prime rate's only 4%. So rates have actually gone down in the marketplace, but our yield, or the original amount, the original issue amount here was 14% actually. Okay, that's what this tells you. Okay, is much higher than that, and so in order to buy these, you would pay 107.55% of the price. Okay, so if this was just $100, you'd have to pay $107.55. Okay, and why is that? Well, technically, you're getting a 14%. Okay, you're getting 14% on your $100 investment, but current rates are much less than that. I mean, New York Prime, of course, it wouldn't pay prime, but it'd be something over that. Okay, and so if on the other hand rates had gone the other direction, if rates had gone up, then you might be at a discount. Okay, so we're at a premium. If it had gone the other way, it would have been at a discount. Okay. So take a look at that. I kind of gave you the calculations and whatnot. This happens in real life all the time. Bonds are bought, sold, traded all the time. You and I could call our broker and buy or sell bonds just today in a matter of seconds if we really wanted to. All right, back down to the cash flow stuff going on here. So we got some net income. We got 3 teams that had losses, 3 teams that had gains. Some inventory. Erie gained a lot of cash, getting rid of inventory. I think that's 2 rounds in a row. They've been effectively, reducing their inventory, which is good. But Digby and Ferris and Baldwin kind of made up for that by having lots of increased inventory. Plant improvements. We don't see anybody other than our computer team really doing significant plant improvements. Andrews to a smaller extent. So. Chester did pay a dividend, bought back some common stock. Okay, so we're starting to see a team that's actually buying back some common stock. We see some long-term debt issued, just a small amount by Team Digby. Current debt got retired, which is automatic, right? Current borrowing, and yet we still had some emergency loans. 4 out of the 6 teams had emergency loans, Andrews being the only student-run team that did not. So not a lot of cash. Chester has a decent amount of cash. In spite of paying a dividend and buying back some stock, they still have a lot of cash. Okay, it'd be interesting to see what they do. Balance sheet, we kind of take a look at. There'll be some questions, like I said, regarding the equity, and so that's going to be this line that you're going to want to pay attention to. Erie has got a negative equity. Boy, what's that mean? Not particularly good. Okay. What else do we got going on there? Sales, profits. I like to look here at the investments. So Digby and Andrews looks like they invested in some TQM. Chester to a smaller extent. This is round 5. They might have done investments in round 4 as well, and we'll start to see some of that cumulative, what that means on a cumulative basis. Tons and tons of production capacity. Okay, tons of production capacity. You get these top 3 teams are barely using their production capacity. Digby's about the only team, but they may have produced too much, right? Because they got a lot of inventory. We saw that up above. And you got Erie and Ferris with just all kinds of capacity as compared to what their production was. And we were a little bit concerned about the inventory things, and you see that here. Okay, we're going to see something that's a little bit odd in Digby. Here's their traditional one, all kinds of product left in inventory, and yet this traditional one sold out. And what we're going to see below is in the potential versus actual. They had more potential to sell, but didn't. Well, why is that? Well, this product was apparently a popular product that would have sold more. Okay, not so much days. Okay, in fact, days might have sold more than it actually should have. Okay, but obviously all kinds of production there. Wow. Erie, you remember they had lots of inventory and they've started to really sell. Now they sold all kinds of stuff here in the low end, okay, at low prices, but unfortunately haven't done some of the things they need to do to bump down their cost. Okay, not a lot of improvement in automation, not a lot of TQM, things like that would cut the cost over here. Still having 14,000 MTBF on these two low end ones are increasing their cost on the material side. So got the sales here. Okay, if they can get that contribution margin up, it could be very effective. And Ferris in the low end, a decent amount of inventory that they didn't sell. Also in the size, look at that. They only sold 54 units. So again, this might be a product that isn't meeting some of the customer. Well, it's obviously a product and it's not meeting some of the customer buying criteria. So let you guys kind of scroll through these. Andrew's got the benefit here, okay, in the traditional segment, okay. And again, isn't that interesting? I talked about Digby, right? So they had some more potential than actual. We've come down here, their days, they had all kinds of that left in inventory, so they couldn't sell it. But Disco, they could have sold quite a bit more. I'm guessing days, the age was probably a bit of an issue. What might have been some of the other things. Their price wasn't really an issue because Baker sold a lot more. Could be their location, performance, a little big on the size, and performance not so good. Again, you got to come up to the buying criteria, but age being the number one, price being, they're still outside. So was Baker though, outside the price range, but Baker had some of the other things going on for it and spent a lot of money, it looks like. But the performance and size, whereas Disco was up here, was popular, could have sold a lot more. In the low end, Erie, we see that Erie, kind of dominated there. That's interesting. So they've established themselves there. Like I said, if they can work, they need to keep their products popular in that area, and do the right things to, again, match the customer buying criteria. Price, age, right? The two more important things. Price and age are the two more important things. And they really got to work on that to keep that there. But then they also have to work on getting their contribution margin up because that's kind of killing them there. In the high end, look at that. Andrews, and they did that last round, right? Gave up a lot because that was one of your questions from last round. They could have sold. Their actual is about 27%. It looks like they could have sold 43, 44%. So gave up again 15, 16%. And we calculated what that cost them in millions of dollars last year in profit, and it was pretty significant. So we'll see that. Again, I didn't ask you any questions about that this time. Same thing in the performance. Okay. In the size, that's where Ferris sold just almost nothing there. Well, there you go. Their product was basically outside the main circle. Okay, and so, that's kind of poor planning, I guess you would say, when your product is not going to, and when you're making those decisions, it shows you where your product's going to end up being in the perceptual map. And so knowing that it's not going to be there, and trying to count on the sales is. A difficult thing. The overall perceptual map, okay. Again, we see some competition up here between Andrews and Chester, keeping their products pretty relevant. Digby, picking up some scraps, being fairly relevant, also having lots of products in those areas, and having good presence here, right? Whereas in the traditional segment, good position for fast, but foam and fumer leaving. These ones are just about to fall completely out of the main circle. That could be an interesting. One of those is our computer team, so we'll have to see what they do. Okay, and feeds outside, and so again, a little less of a concern. You might still have some sales if you're in the dotted line here in the low end, but that doesn't work for these three high end products, right? You start getting outside of the main circle, and it becomes a lot more difficult to sell those products. HR, so we see Andrews gaining quite a bit, spending some money here, investing some, I should say, gaining quite a bit in productivity along with Digby. Okay, Erie pretty well too, and TQM. Yeah, we're seeing, some pretty good advantages here. I don't know if Digby was completely relying on those to try to push their sales and whatnot. It wasn't round 5. Was it a down round in terms of demand? I'm just going to see what's our demand for next round going to be. Yeah, next year's segment. So this round was the recession round, if I'm not mistaken. Round 5 was, and we get a little recovery here, but it's not much recovery when we look at the next year segment growth rate. It's just kind of about even for next year. So you always got to take that into consideration as we move forward. So, I haven't done the winter deal yet, but I will, and I'll get that posted, and you guys will be able to see. So thanks, and I look forward to round 6 coming up.